Well, welcome back to Finance Uncut. On today's episode, this will drive silver demand. And coming in from the Silver Institute, global connectivity to boost silver demand in electrical and electronics applications. So in this video, we're going to discuss what is going to drive silver to its all-time highs and beyond in terms of price. And we'll go through this article and we'll look at the industrial demand. We'll cut to a clip from a video Mike Maloney did. And then we're going to come back and stay tuned for this because I had a discussion a fortnight ago with an institutional investor who did buy silver last year. And we had a very interesting discussion about silver. So stay tuned for that. All right, so let's get into this article. With the highest electrical conductivity of all metals, silver is a component in almost all electronic devices we use daily. But silver isn't just vital today. The next generation of technological advancements, especially those related to global connectivity expansion, will rely on the white metal's inherent properties throughout the 21st century. As a result, the use of silver in electronics and electrical applications, including photovoltaics, is forecast to rise from 224 million ounces in 2020 to 246 million ounces in 2025, reflecting a 10% increase, underscoring silver's role in emerging technologies. To further examine silver's role in expanding global connectivity, Silver Institute, as part of its series on market trend reports, today released Silver and Global Connectivity, produced by CRU International Limited, the London-based consultancy. So who is CRU International Limited? CRU International are basically a commodity research firm, been around for 50 years. On their website, they say they offer unrivaled business intelligence on the global metals, mining and fertilizer industries through market analysis, price assessments, consultancy and events. So let's have a look at this chart that they've done. Let's just blow it up a little bit bigger. So according to CRU, they believe that the demand for silver in electrical and electronics applications are going to increase dramatically over the coming 4 or 5 years to over 245 million ounces. So yeah, if correct, this chart definitely shows more of a industrial demand in that electronics and electrical use. So I'll put a link in the description below to this article where you can download a copy of the full report for yourselves. However, the key points from the report include the world is becoming more connected through the billions of physical devices that connect to the internet. Silver is playing an important part in providing increased access to information, global markets, and communication, and as a result, boosting productivity, reducing waste and inefficiencies, strengthening supply chains, and don't we need that, allowing greater automation and spurring economic activity. This is especially notable today as the has caused a dramatic uptick in the number of employees working and students learning remotely. Radio frequency identification devices, or RFID, wirelessly connect objects for tracking, monitoring, and data collection. The logistics and supply chain industry have had high adoption of RFID tracking systems to monitor their assets through air, rail, road, or ship. Healthcare has also benefited by allowing workers to discover real-time location of life-saving medicines and equipment. Projected usage of silver for RFIDs is expected to increase as much as 400% through 2030. Silver is integral to applications used to forge connections across the globe. These include the expansion of 5G communications technology and the joining of once unintelligent goods to a greater ecosystem through the Internet of Things. The network of historically non-communicative physical objects that are now able to relay information. For example, silver is at the heart of many new technologies that establish reliable and instantaneous connections between people and a wide array of machines, appliances, and devices, including smartphones, white goods, and exercise equipment. As global connectivity expands, each application will require various sensors, communication, tracking, and monitoring devices. Many of these applications will use silver in their semiconductors, electrical contacts, and elsewhere. In addition, the underlying infrastructure supporting this connectivity transition, such as the 5G network and Internet of Things, will contribute to increased silver demand. Notably, silver offtake in electronics and electrical applications will benefit from the global green revolution's need for additional power distribution to connect renewable power, and you guys know what I think of that. Off-grid energy storage, and increasingly the installation of electrical vehicle charging stations. For instance, according to the IEA-SDS, the International Energy Agency Sustainable Development Scenario, the proportion of electricity generated globally from, I hate even using that word, renewables will increase from 29% in 2020 to 49% in 2030. So yes, there is going to be a huge increase in demand on an industrial level for silver. You guys know from my earlier video I did earlier this week about the $173 trillion commodity boom ahead, that silver, along with copper and other metals, I'm very bullish on because of this move to this, let's just call it the electrification of our economy. Because I hate using the word green and renewable, because that's just marketing slogans, and I've got to be careful what I say here. But is industrial demand going to drive silver's price to all-time highs and beyond? Well, let's just cut to a clip from Mike Maloney in what he thinks is going to drive silver demand higher, or the price of silver higher, and then we'll come back and I will discuss my conversation with an institutional investor and what I believe is going to drive silver to all-time highs.
Well, Mike, on to some reader feedback. This is really good. I think you'll like this. This is from Chi Lao, if I'm saying it right. My friend and 3 coworkers are buying silver this weekend, and I'll be joining them as well. His mom and his aunt also want to buy silver now. A few years back, this would not have happened. This year is different. What do you think about that, Mike?
Yes, it is. And this difference is something that's increasing. And I have often said, and Dave Morgan, my friend Dave Morgan says, that it will be monetary demand that drives silver to the moon, not investors jumping in and out on it. But when people are worried about the dollar and they're looking at silver as money. And so for me, one of the things that I've always wanted, and I've got some, I've been writing some cryptos up. They've hit some targets. I'm sitting on an excess pile of cash right now, and I'm about to add to my position on silver. The gold-silver ratio is back up in an area where I'll probably buy all silver or mostly silver. And I just want to be ahead of the it isn't just a crowd. This is ahead of the stampede, because it will be a stampede. To borrow a line from, I believe, Jim Paplava from years ago, it's going to be like trying to put Niagara Falls through a garden hose. There's going to be a stampede, and silver is such a tiny market.
It is, yes. I remember Doug Casey used to say that a lot too. I don't know who came up with it at first, but that's exactly what it's going to be like. It's going to be a panic into precious metals, and $50 silver would just be a pit stop on the way to higher prices in that environment. So,
love this tweet from Peter Spina. Flashback to 1964, President Lyndon Johnson. Silver has become too valuable to be used as money. Fact check. The US dollar has devalued and is losing value quickly to be considered money. The final links to real money must be severed. So Mike says that it's going to be monetary demand or investment demand that will drive silver to all-time highs and beyond. And folks, I agree. So before I get to my conversation with this institutional investor a fortnight ago, the industrial demand side is going to play an important role, in my opinion. So as we see the demand for silver on the industrial side continue to increase across multiple applications and we start to see the supply-demand issues that we know we're going to see in silver in the months and years ahead, that is going to attract the attention of institutional investors and other investors, not just retail investors, not just those of us that love sound money, but you're going to get those other players come into the market where they see that investment opportunity. So the industrial demand is going to play a key part in that. But it's really, in my opinion, it's the institutional investors that will pour into the market, that will drive the price of silver to its all-time highs, and I believe beyond, perhaps into triple digits. And I still think that triple digits is where we are headed, without any type of reset or anything like that. Obviously, if we have some kind of reset, that Luke Groman and Jim Rickards talk about, then yeah, obviously silver could be reset to a much higher price. But I honestly believe in my heart of hearts, and now I don't sell silver. I'm not a bullion dealer. I got nothing to gain in this. I don't sell any books or training packages or whatever. I'm just an investor giving my honest opinion on what I'm doing and what I see, and just sharing my opinion. Once again, not financial advice, but it's, in my opinion, this institutional investing, and it's a two-part thing. So let me share my conversation with this institutional investor, who I will try not to identify. I really suck at doing this. I usually let things slip. So, and since I don't edit my videos, or I don't do multiple takes, I do all my videos in one take, hence Finance Uncut. Yeah, I may stuff up. So this institutional investor actually reached out to me because this person actually came across this channel and watched a few videos, and I thought I had something positive to contribute to the debate. And so this person reached out to me, and we've had a conversation. We're going to stay in contact as well. In fact, we had a little bit of a debate as well, which I'll share with you in a sec. So this institutional investor told me that they did buy silver last year, when the Fed and the government announced all the different things that they announced. This is when this institutional investor dove in, but this investor bought the SLV ETF. Now, they did that for a couple of reasons. One, they thought that we could have financial chaos, basically, and what we're looking at closing down the economies. Like, are we about to go into the greatest depression ever? So they weren't even really kind of worried about inflation. It was just complete chaos. And they wanted to be out of risk-on assets. Then they saw the liquidity being pumped into the markets, and obviously silver had a nice run up, and they actually sold silver. This investor told me that they sold silver in the middle of last year and towards the end of last year, and they were completely out of silver by the end of last year, because they were expecting the stock markets and risk-on markets to fall once again, to have another downward crash. Really, they thought that March, and this is my opinion as well. This is what I thought, is that that we're going to have another crash within months after March last year. However, they saw the liquidity being pumped into the markets, and then the retail investors, the Robinhood investors, getting checks from the government and just pouring that into the markets, and it just became a casino. It became, what do I got to lose? These retail investors, new retail investors, basically said, well, I got nothing to lose. I just got this free check, free money, they call it. I may as well just punt it on Tesla or punt it on this stock or that stock or whatever. And so this institutional investor saw what was happening and decided to take profits from silver and move it into risk on assets, the Nasdaq and the S&P 500, and they actually did buy a little bit of crypto. So they were completely out of silver and into that risk on assets, and that's been for them a really good play. Now the conversation has been that they are now taking profits off the table. So they have sold crypto. They are selling and have been selling their Nasdaq positions for a little while now, and selling their S&P positions. They're worried about obviously a lot of things, geopolitics, but in particular in the asset in the markets that they're in, they're concerned about valuations and inflation. So they haven't been worried about inflation. They did believe that inflation was mainly due to supply chain issues, closing the economy, all this sort of stuff, and that it would be temporary and transitory. However, now they're worried about it, that it's actually that the Fed or central banks in general don't have control of inflation, and that there's potentially permanent scarring there, and that we are looking at a 70s style stagflation environment. And they're also worried about the move towards left-wing type policies and socialism, MMT, all that sort of stuff. And so they're actually now thinking that we could see much, much higher inflation down the track, which could lead to policy changes that become risk for or headwinds for risk on type assets. And so they're starting to change their portfolio there. Now, when I discussed, so the debate that we had was they bought the SLV ETF, and I was talking about that they should buy the PSLV ETF because Sprott actually takes delivery of the physical and store it. And one of the reasons why they buy the ETF is they want exposure to the price of silver. They're not long-term holders of silver. They're more longer-term holders of gold, but they want the price appreciation of silver, and they want the lowest cost. So they don't want to be paying fees to hold it and whatnot. Now, I explained a little bit, and I told the person to go read the prospectuses of both the SLV and PSLV, but I also said to have a look at the price correlation. So when and any of you guys can do this, go have a look at inflows into the SLV ETF and have a look at the price of silver. There's nearly no correlation there. So one would think that investment demand doesn't drive the silver price. However, it's physical investment that drives the silver price. So what I said was the PSLV will take delivery of the physical and will store it, but you've got the same low costs to invest in the PSLV ETF. I said what you'll do is you'll actually drive this price, as a bigger player in a small silver market. You'll be able to drive the silver price much, much higher, I believe, in the PSLV than the SLV. And anyway, I just said, look, he didn't quite agree with me on that. I said, look, go away and do the research and prove me wrong. It's the physical that drives, and you can see the price correlation there. Have a look at the SLV. Have a look at the inflows into SLV. Have a look at the price. No correlation, trust me. But he did say that they believe that silver will give larger returns. But they will sell, and they'll move those profits into other sectors. And that they're not believers in sound money like we are, and they're not long-term holders of silver. They understand silver is more volatile than gold, and they want to take advantage of that. So and I shared with him that David Morgan has this saying that 90% of the move in silver always comes in the last 10% of the time. And to be honest, when I look at the silver market at the moment and I compare it to 2010, I can see some similarities there when I look at both the COMEX market and the physical market and the price of silver. So so I'm still bullish. They are looking at getting back into physical gold, or into gold and silver again. As I said, they've sold some of their crypto positions and their NASDAQ positions and S&P positions because they are worried about both valuations. So they're expecting perhaps the market to whether it crashes, or whether we see a bear market for some time, or whether we just have a sideways market for the foreseeable future. They don't see gains in the S&P 500 and NASDAQ moving forward because of the valuations that we're at. We're also worried about inflation, as I said, and what the policy responses could be to that. If the central banks do actually taper or do raise rates, then that is going to impact risk-on type assets, and this is where they want to have that position. Or do we see the political move to the left and MMT and this central bank digital currencies and what that will mean for monetary policy? So so in my opinion, I think Mike Maloney's right that it is the monetary demand, the investment demand, but the investment demand in physical. And I think it also, us retail investors, and this institutional investor actually said to me that the silver squeeze in February was pretty much all retail investors. There was next to no, institution or big money going into it. It was predominantly retail investors. So when the institutional investors start pouring back into this, and we could be seeing that sooner rather than later, we're probably going to see a nice run in silver towards the end of this year. I've said it, my price target where I think silver will be pushing either all-time highs or triple digits is 2023. That year for me, the inflation, over time, when people will start to go, the Fed, you central bankers, you said it was going to be transitory. You're liars, and people are going to lose faith. And I believe even pushing towards the end of this year, maybe early next year, we're going to see the government in the US, the government CPI numbers, and I think Mike Maloney calls it CPI. The government numbers are going to be pushing double digits CPI. Now, I'm not saying it's going to be double digits. I wouldn't be surprised if it does hit double digits, but it's definitely going to be high single digits either towards the end of this year or early next year. Now, we know that those numbers are dodgy and that the real numbers already are in double digits. Listen to anyone from John Williams at Shadow Stats, or I'm trying to think of that billionaire. I always forget his name. They're already saying that CPI is at 12-13%. But that's what I think is going to drive the silver price much, much higher. It's the industrial demand will play its part. It will tell, especially institutional investors, that they need to get a piece of silver in their portfolio, simply because of the supply-demand factors. But it's going to be the investment demand that drives silver much, much higher. But that's my opinion. Once again, not financial advice. Anyway, guys, if you like this video, please hit that like button. Really do appreciate it. Love to see your thoughts in the comments below. Anyway, take care, and I'll see you again on another episode of Finance Uncut.